Good evening, everyone. Can you guys hear me? Okay. Can you guys see my screen? Is it clear?
Just I don't understand. Network is just terrible this evening.
Hear me first now. So I'm mute, just stop it. Okay, good evening, everybody. Can you guys hear me? Okay. My name is FZ Nation. So today I'll be taking you guys on time and price. I'll be taking you guys on time and price. So today I'll be taking you guys on time and price. And first of all, I want to explain this to you guys. One of the things you must understand about time and price is that it majorly tells us about the when of the market. You guys me? You can see my screen, Abby. Okay. Okay. Now let's dive into it. Now, time and price. First of all, majorly people normally ask me what is time and price. Now, the concept about time and price is when timing meets with the price data of the market. Do you get me? When what timing meets with what with the price data of the market. And one of the way we normally detect this major um meeting point between time and price of the market. Now I'm going to explain in details, but I want to explain this in simple terms so you'll be able to get me. You'll not be confused. And make me to know when you can't hear me clearly. Make me to know when you can't understand what I'm saying. Okay. Now you must understand something as a trader. When we talk about trading, the entire concept of forex trading, the concept of forex trading is that as a trader, the first thing you want to do is to um know where the market is going to. You get me? So you want to know the where. I'm sorry, I'm just trying to sketch out anything so you will know where I'm going to. Sorry, this is not my. So you want to know where the market is going to. So the directional bias of the market is the first thing you want to understand. So it means that if we want to look at the step-by-step concept of time and price, sorry, I find it difficult to write in here. So you are just going to make sure you are jotting down. You make sure you are jotting down wherever you are. Yes. So the first, Jesus, I said it is FZ Nation. It is FZ Nation. FZ Nation. You get me? Eh? It is FZ. It is not. It is not Kelvin Talent today. It is FZ. Joseph, nice to meet you. Okay, so let's continue. Now, I just want to list out the steps of time and price. You get me? So let's look at the steps of time and price now, and I'm going to explain every single of this step in details, and I just want you to pay attention to them. I'm going to explain every of these steps in details. Now, first of all, as a trader, one of the first thing you must understand is this: is that the first notable thing you want to do, you have come into the trading world, into the trading industry. The first thing you want to do is to what? Is to build your edge. Is to what? Find your edge. We have the first point is to find your edge. The second thing is to what? Is to build your edge. Then the next things you want to continually do is what? Is to sharpen your edge. You get me? And let me tell you something. Finding your edge, one of the best things that could help you find your edge is having a good mentor, and you found yourself in NIKHIL. Beautiful. You get me? So when we come about building your edge, trading must be personal. You get me? It all talks about your own personal work, deep personal, building your personal experience. You get me? Now today, I'm going to be showing you time and price and how it easily works. There is nothing complicated about it. It is one of the best confluence you can add to Kelvin Talent on model, time and price. Now let's look. The first thing I want to know about time and price is this: is that for the time and price model to work out well, it must what? It must correspond with what? With the trend. So let's say step 2. Oh, sorry about that. Sorry. So step of time and price. The first one is number one, we won't be able to what? Get I'm coming, I'm sorry. Number one, we want to be able to what? To know what the trend, that's the directional bias of the market, is the first thing you want to be able to get. Now there are many ways to get directional bias of the market. You get me, but I don't want to talk about much of them, but let's look at a few things from here. Okay. Now, for example, now as a trader, you want to know where the market is going to. Every single thing makes sense. Every single thing is going to make sense in the direction of the market. You get me? Every single thing is going to make sense in what? In the direction of the market. Where's the market going to? The market, you want first for detect, okay, are we in an uptrend? Are we in what? In a downtrend? You get me? And when we are talking about directional bias of the market often talks about a trader being in the continuation entry of what? Of the market and not reversal. You get me? So for example, now if I want to know where the market is going to, some people they make use of their trend line and the rest of that. I believe that this class has really put you on knowing the directional bias of what? Of the market. Now the first thing you want to do before knowing the time and price is that you want to be able to what? Know where the market is going to, directional bias of the market. That is the first thing you want to know. You get me? Now there are some certain things that give you confirmation towards the direction bias of the market. Let's look at them. I'm sorry. Trying to meet up with this class and other things. Okay. Now, for example, now let me say I know that the market is what is going in what? In an uptrend, for example. God. I know that the market is what? Going in what? In an uptrend. I already know that this market is going what? In an uptrend. Directional bias already show what? An uptrend. Now, when we come to knowing having a confirmation of the continuation entries, some certain times we want to see markets reacting on a trend zone. We want to see markets reacting what? On a trend zone, and we want to see majorly a shift of market or a market shift or just a breakout, any of them. You get me? Now, I want to see that particular breakout. I want to see market returning to an order, returning to a zone. And after we see market returning to a zone, specifically can give a liquidity in the lower time frame or in that same higher time frame. and we want to see market now having this particular confirmation that okay, fine, we are buying. Now we cannot start buying in respect to what, to the trend. All of this can be happening in the same time frame or happening in what, in a more lower time frame of it. You get me? You can get the clear of liquidity in a more clear time frame and the rest of that. Now, I am just trying to make sure that I don't assume so much that most of you know the directional bias of what, of the market. What am I saying? For example, now we confirm with the particular breakout that the reversal move is over. You get me? A body breakout, a reversal move is what, is over. And in the SMC concept, in SMC concept, we've seen that particular shift of market structure around here. We'll see that shift of market structure. Uh, we've seen the shift of market structure. So that's why you see some certain times one of the best confluence to know when your breakout is happening is that okay, in the SMC world, there's a shift of what, market structure, and you see market giving that particular liquidity around here, and you know, liquidity around here, and come into a key level or into a zone. You get me? And we can continue buying. Now we are not saying, what I'm trying to say is that now your time and price begin to this first part about the first thing is this, that you want to know how. Now this is not the main time and price concept. That is not, we've not come into it in detail. The second thing around the time and price concept is this number two. I mean, sorry. Oh my god, sorry, this is I'm not meant to be here. Okay. Okay. Sorry guys. Sorry guys. Are you guys still with me? Are you guys still with me? Yeah. Okay. 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 You guys are still with me. Um, okay. I'll check whether I'm recording. I'll check whether it's recording. I think it's recording, right? Okay. I'll check it. Okay. So as I was saying, now you want to get that particular breakout and the rest of that. Now they are every single mini structure. They are the main structure. They are mini structures. We all know this by now. Now the next thing you want to see is this, is that I needed to get something very straight. You know, I was telling people in my Telegram channel, this is very important, that I am trying to tell you something. I can place my integrity on this particular stuff. That if you trade this model for at least a year, you should be able to see a massive shift in your trading life. In fact, this is what changed my life. Time and price model changed every single thing for me. So the first thing you want to do for me is what, is to know the directional bias of the market. You get me? Know the directional bias of the market. And I just quickly, in a small term, just explain directional bias and how to know where the market is going. You get me? Now, the next thing you want to understand is this. The second step is this, is that you must have a clear understanding about um zones and key levels. You get me? You must have a clear understanding about what zones and key levels. There should be what, a clear understanding about what zones and key levels. Now, for example, now I want to see if you don't, if probably, let's say you are not, you don't trade zones, or you don't trade key levels, probably it was not factorized into your scheme of work. For example, now this is what we are saying. Number two, saying that you should know about zones. I'm going to quickly explain about what zones, key levels are all about. It's not complicated at all. Get me? Zones and key level. Zones and key level. Now, I don't have much time to go into details about them, but I'm going to drop the important ones here. I'm going to make sure I drop the important ones around here. Now, for example, now there are different kind of key levels that we have. You get me? We have first of all, there are two forms of key levels you must understand. We have the validated key levels and we have the invalidated key levels. Now, the types of validated key levels we have is what we have the V-shaped what key levels. You can know key levels using your line chart clearly. You can know key levels using your line chart clearly. Okay. Sorry about that. So the V-shaped key level talks about we anticipating what a buy. It talks about anticipating what a buy. It is the key level for buy. For buy. So what are we saying? We are saying that if market comes into this particular point, once market comes to this particular point, God Almighty, Jesus, I make use of iPad. This mouse is just messing me up. I'm very sorry. I just hope you bear with me. Okay. So you see, once market come into this particular place, we expect market to what buy from this particular what zone. This is a validated what key level. Now, this is just normal thing. Now, there are some certain time the invalidation part of this particular kind of key level is that we have that same V shape around here. We have that same V shape around here, and once we have that V shape around here, now the normal thing is this is that we're expecting market to come here and what and buy, but you see market comes to this particular point and break it down impulsively majorly talks about a body breakout. Majorly talks about what a body breakout. Now I want to see markets what break out this particular. Jesus Christ. Okay, fine, guys. Do you understand what I've been saying so far? Do you understand what I've been saying so far? Hope you get me. Okay. Now, so we have the invalidated what key level. We want to see markets what disrespect this particular key level, not coming to this particular place and not obeying it, breaking it down impossibly. Now, this particular kind of key level automatically becomes what an invalidated what key level. And if it is an invalidated key level, the next thing you want to see is that market is going to what use that place for what a sell. For a sell. Now, I'm going to explain deeply about these things to you. Market is going to use that particular point for what a sell. That is an invalidated what V-shaped key level. And the reason why I'm going through key level is because of I'm not trying to assume that Jesus, please hope you're understanding. I beg. Sure you're understanding. Wait, you can't hear anything. Can you hear me? Please, can you guys hear me clearly? Can you hear me? Can you hear me clearly? Okay, you can hear me, right? Thank you. Okay, let's continue going back to trading view. So market is going to use this particular key level for what? For a sell. For a sell. Okay. Now, one of the things is that before I go deep into other part of key level, is that you must understand something about key levels. One of the thing about key level is this is that key level talks about actions and reactions. Now, if you look at this particular diagram, this diagrammatical explanation that I have here, you will see something around it. Is that what we did here is that markets came into this particular key level, and this is a V-shaped what key level, and markets what bought from here. You get me? And now if you see this now, if you see this next key level, that is the continuation entry, this is more like an invalidated what V-shaped what key level, and market what came here to what to keep buying from this particular point. You get me? Now we have another key level around here. I'm coming. Let me arrange this very well. This is an A-shaped key level. We are going to talk about it. A market will also start buying from here. You get me? Now, every single thing I've been trying to teach so far is that the two steps I've listed so far. First of all, trend, and I'm trying to like show you the directional bias of the market. What do you think we do in trading? What do you really think we do in trading? there are few things we do in trading. We don't actually do much. We just do three things. Every single model that is on the industry of forex trading is going to just teach you two things. It's going to teach you these three things. First of all, where is the market going? The directional bias of the market. That is when we begin to talk about trend line. We begin to talk about trend. We begin to talk about trend, and we begin to talk about market structure. What is trend? Trend is the directional bias of the market, where the market is going to. What is market structure? Market structure talks about how the market is moving in alignment of what? Of the trend. You get me? That is every single thing we are. That is the first thing you must understand about trading. Where the market is going to. How will the market go where it's going to? For example, now I'm heading to Lagos. That is where I'm going to. You get me? Am I going to take flight? Where at the bus stop am I going to alight on? That is the how. So trend is what is where the market is going to. Market structure is how it's going to move in accordance to what that trend. That is the first thing you want to understand. That is the first thing you want to understand about what about trading. The second thing you want to understand about trading is this: is that where are these specific points? Where are these zones that the market is going to pick us from? You get me? So we talk about the where, we talk about the how, then time and price begin to tell you about the when. The when. That is what time and price begin to tell you about. I don't know, are you with me? So that is it. So I know once I do the tutorship today, Kevin Talent will do the mentorship. It's going to ask you people your progress. Okay, let's continue. So we have this invalidated. Now we have the A-shaped key level. The A-shape, that is just an inverse. It is just the one for the what? For the sell. You get me? Now you must understand something. Key levels are very, very, very important in higher time frames. Higher time frames. You get me? I want to know, will market start reacting from this zone in my higher time frame? Yes. I want to just know that through a confirmation with the time and price. A lot of people trade key levels, but most of them, they don't know how it works. You get me? And with the privilege of God, I've been able to understand this through time and price. So let's continue. Sorry, I'm breaking. So we want to see this sell from this particular angle. You get me? So that is a respected or a validated zone. A validated what? A validated zone. Okay. So we have the invalidation part of it. Oh my god. When we have this particular zone like this for the sell, you get me, and we are expecting market to come and sell from this particular place, but what did market does? Market break it, and that particular sell point becomes a point for what? Buy. You get me? So that is the same thing we have around here. This is a V shape. Market was meant to what? Market was meant to sell from here, but market did not sell. We broke it up, and we keep what? Buying from what? From that particular what? Place. Okay, now we have the open close key level, a very important key level you don't want to neglect, because of certain times you'll be like, oh my god, market did not get to my POI, market did not get to this, market did not do this, market did not even get to my zone. Why is it buying? What is making the market? Tell me, why are you buying? I think we are going to still come down and give liquidity and come. No, bro, it's not going to come down. Once you see the liquidity and market begin to push up from that particular place, something is making the market react. You get me? Because of there are two major things market does. Market what? Create an order and takes out what's an order. Okay. Now the open close simply means we have Jesus, not this two. Wrong two, guys. See, let's just catch one today. Let's just play around. See, it don't make us go far. Like once it's time for question, that is the time you should ask a lot of questions. Is your money okay? So open closes like this. Let's say I have a candlestick like structure around there. I have another one like this. Now, like this. You get me? So now this, it's called open close. Now your layman sense should tell you about about this, that we are talking about the closing part of the market and the opening part of the market. That joining point between both of them, that joining point between those two candles. That is what we are talking about. I'm trying to draw a good diagram as possible. I might be new if I'm not drawing it well. You get me? So the open close is what is that joining point between these two time frame, these two candles, sorry. So we want to see, is not complicated. I'm just trying to I'm just meant to come and just tell you, okay, key level, this and that, but no, I want to be certain that there's no assumption that you understand what I'm saying. Okay, now this is an open close candle and this is for a sell. This is for a sell. So what are we saying? We are saying that if candle comes all the way, if market comes all the way up here, we are down. Overactive filetiness and coafiness and inactiveness. Where's my part 2? We are saying if markets should come here like this, we're expecting markets to come out here like this and sell. You get me? That's what we are saying. You get me? So the invalidation, you know what the invalidation should be now. The invalidation is that we are saying market is meant to come here, but to sell from here, but market did not sell, but breaks up impulsively, then have this particular retracement. You get me? And want to see market buy. Want to see market buy from this particular point. Want to see market buy from this particular point. Okay, so and we have the opposite of it for the buy. No need to try the same open close for the buy one. You know what it is. Okay, fine. This, I think we're able to talk about directional bias. We're able to talk about zones and key level. Now, the other thing you must understand, we've not even entered the main thing, and I'm looking at the timing for the class. Okay. Now, the other thing you must observe is that you want to observe the reactions of market on this particular zone. And one of the ways to see the reaction of this part of this the reactions of this zone is that our major time frame is this. Our time frame for the key levels and zones are majorly 4 hours and daily time frame. You get me? So we want to always see markets react on 4 hours time frame. We want to see key levels, we want to see 4 hours key levels and above. We want to see 4 hours key levels and above or your POIs. You get me? So what do I want to see now? Let's say market now, for example, now the time and price now is this. You must understand that time and price is when market meets price. I've said that before. Now, for the time and price model, it works majorly for for USD JPY. For JPY PS. You get me? I trade time and price using JPY PS. Why? Because of the major time and price I focus on is the Asian section. You get me? The Asian session. Now you must understand something about the BOJ, that is the Bank of Japan. The Bank of Japan opened during the time we call the Asian session. And one of the things it does is that whenever there's an opening of the bank, there is a very high volatility that is introduced into the markets. You get me? Now that volatility is one of the things I want to cash. For me, most of the time, I'm done trading before most people wakes up. You get me? Now the timing for the Asian session is actually market opens around 1 a.m. Nigeria timing, 1 a.m. 1 a.m. You get me? So what am I saying? I'm saying something as simple as this. It is not much. I'm saying, let's say for example now, you know where the market is going to. Let's say you know that the market is going in an uptrend. You get me? And we have, let's say market react from this particular place. Let's say there's a key level and we have something like this now. Just follow me, shit. I'm trying to show you the A+ setup. coming. You get me? And now market comes around this particular key level in 4 hours. Okay, let's stop here. Let's stop here, please. I need your attention, every one of you. I need your attention to be here. I need your attention to be here. I need your attention to be here. Okay. Think you are with me. Now, let's say this is a 4 hours time frame, a 4 hours bullish market. You get me? Now we have this particular key level here of 4 hours. You get me? We have this particular key level of 4 hours. Now let's say on the norms, most times most people that trade key level, they want to see markets like react. And what do we mean by reactions? That means I want to see the reactions is that the 4 hours candle that comes here gives a liquidity. You get me? And the week closes what above, something like this. I don't know whether you can see this diagram. I'm trying to sketch out here. You get me? The week closes above what? Above that particular key level. Yes, this is good. This is good. This is very good. You can do this as well. And probably you have another candle that is a body closure. That is a body closure. We are dealing with 4 hours time frame right now. You get me? And like this now, this is another what? Another key level. You get me? Now, but I'm trying to tell you that during the time and price, you don't need to specifically wait for all of these ceremonies. All of these ceremonies, you don't need to specifically wait for them. Because of the old time and price concept is that during the Asian session, I want to see a sweep. I want to see a 1 hour sweep. I want to see 1 hour 1 a.m. candle sweeping 12 a.m. candle, or 2 a.m. candle sweeping what 1 a.m. candle, or 3 a.m. candle sweeping 2 a.m. candle, or 4 a.m. candle sweeping 3 a.m. candle, or 5 a.m. candle sweeping 4 a.m. candle, or 6 a.m. candle sweeping what 5 a.m. candle. I want to see that sweep of candle. You get me? What is sweep? What do we mean by sweep? I want to see this particular candlestick formation like this. I want to see first candle like this. I want to see another one. I want to see another candle. I want to see the next candle like this. I'm coming now. Oh, Jesus, I wish this is my iPad. Would have been very fast with this class. Okay, now we have candles like this. Uh, so I'm trying to say that in the 1 hour time frame, during Asian section, I want to see this particular kind of formation. Now, when I see this particular kind of formation, it automatically tells me that we are going bullish. You get me? We are going bullish. And sometimes you must understand something in the JPYPS, Asian session serves as the low of the day, or the high of the day sometimes, most of the time. You get me? So I want to be able to see what market goes all the way bullish from this particular point, because of that sweep occurred. You get me? And the same thing goes for the sell. But now we are saying something. This is the model. This is the model. But now I'm trying to give you a more I want to like enlighten you more. Like, let me just share experiences with you. Now, the first thing about this model is that you don't become a slave to pattern. One of the worst things that happens to most traders is that they are slave to pattern. They don't know the logic. You get me? But one of the things you must understand is that logic plus pattern is what equates take profit. It's what equates profitability. You must understand the logic behind it. And you must understand is that one of the best logic that is behind the time and price model, or my own model I call Asian map, is this, is that you must first of all understand that the directional bias of the market is very important. And this is the directional bias of the market, that we already know that the market is what is going in an uptrend. Oh, good. And market is what is going in what in an uptrend. We want to know that the market is what going in what in an uptrend. That is one of the things you must know where the market is what going to. Now see this thing that is happening in the market. Sorry, I think this should be brought a little bit downward. Okay. Now you want to know that the market is going up in an uptrend. In your lower time frame, let's say we have this uptrend moving in the what are they calling it, in 4 hours. In your lower time frame, you can have this move around 1 day, and in your lower time frame, such as 4 hours, you're having this particular break of structure around here. You get me? A market is returning into this particular 4 hour key level. Now, in your 1 hour time frame, this candlestick during Asia session, this candlestick is what is your 1 hour time frame. You want to see a sweep. You want to see a sweep of candle around here. And what you want to see is this. Oh, Jesus, I hope I'm not confused. We are going to look at chart work and we'll just see how they work. Very simplified. And okay. Now we are saying around this particular place. Now let's say this is, you already know where the market is going from your 1 day time frame, and probably you come to this particular place and you are seeing a 4 hours what, a 4 hours break of structure giving this particular 4 hours time frame. Now we are saying for you to know the continuation bias of that market, that market is going up, is this. One of the things you must understand is that you want to see this formation of candlestick around it. That is the sweep model. The first candle coming closer to it like this. We have another candle like this. Want to see this sweep. Want to see this sweep. You get me? So what am I saying? Okay, we have this particular 4 hour structure or 1 day structure, and we have this particular 4 hours key level around here. You get me? And your 1 hour time frame during Asian section now is what is giving you a sweep. Is giving you what, a sweep. Now it's trying to tell you that okay, we are going to continue in what, in the bullish structure. Market is going to buy that sweep around your Asian section is going to what, buy towards to the upside. Even the first, even though it's to the 4 hours high, no problem. The current 4 hours high, no problem. You will see market is going to buy to this particular side. And now this place begin to give you this specific entry. And because of it is Asian what? Asian section. It is Asian section in the JPY PS, in the Japanese PS. Because of this sweep and the market just open, you are going to see a very massive what? Impulsive move. And this impulsive move has the ability to give you straight what? 80 pips before any retracement. Just one single candle. Take you straight there towards to TP. That's what I'm trying to tell you since. You get me? So the confirmatory entry for this is this. It's simple. That probably I see this particular what? This particular sweep now. Now most of the time you can factorize your candlestick pattern into it. It is very beautiful when you have your candlestick pattern. And one of the best candlestick pattern I normally use is your bullish, is your engulfing candle. You get me? I like using the engulfing candle. So what do I mean? For example, now let's say we have something like this, and market close it up like this. You get me? This is a bullish engulfing candle. Now the entries are specific in these three places. This first place like this, there are three entries we have here. The first entry is this key level, the low, the two low between this particular what candle. Sorry, I'm trying to rush, and I'm not even comfortable with this mouse. And the second entry can be this particular place. This place can serve as an open close. Another entry can be probably this particular place did not mitigate initially, and market was close here. You will see markets retracing to this particular place now. Markets coming to this particular point and buy from here. You get me? Now, liquidity is very important. Liquidity is very important. Now, the liquidity is important in your lower time frame. For example, now, let's say I've seen this particular sweep in my 1 hour time frame. FZ, how do I enter this thing in my lower time frame so I can know the right entry? It's very simple. It's very simple. The same entry, is you want to see this in your 5-minute time frame or 10-minute time frame. I use 10 minutes. I don't like going to 5 minutes. You get me? So you want to see something like this in your 10-minute time frame. You want to just see a shift of structure. You want to see a shift of structure, a market retracing into this particular key level here, or an FVG. You get me? Then you buy. You get me? So that is literally what the simple entry around it. I know we've drawn a lot of things in this board today, but I want to know whether you understand this. Now, let me tell you something, guys. We're about to enter the live chat, but I want to be certain that at least a percentage of you guys understand what I've been teaching so far. Is if you understand so far, just tell me yes. If you don't understand, throw in your question. I'm going to handle your question here before we go into live chat. And let me tell you something. I know they've been teaching you a whole lot. Yes. And I know definitely you are going to be profitable, but this is the secret. Until trading is personal, you can't be profitable. A lot of you might even need to pay for another course, which you should not do because of you. It's just all about being lazy and the rest of that. Now, if you are being taught there's a deep study you ought to do, you are going to find something in the chart that only you can understand. That is when trading start becoming personal. You get me? Until you show interest in your craft, that is when your craft will start feeding you. Do you understand this? So because of I know so many of you have been around so many mentorship, and for you not to even go into under mentorship, you must take your trading as a business. It must be something that is extremely personal to you. Deep study, back test, back to back, observe the market, forward test, anything you want to do. You want to make sure you do that. You get me? So that is one thing you must understand about trading. It is not about being fed. You must dig your well. You must find your way in the market. So I don't know. Are there questions? Are there questions? Are there questions? Oh, let me see. I think somebody was raising up their hand before. Okay. We have to take it one after the other. Okay, best time to trade the time and price. I'm coming. Best time to trade the time and price is the time and price. The Asian session is during the Asian session. That's the best time to trade the time and price. And the Asia session is within time frame of what? Of 1 a.m. to what? To 6 a.m. Now you must understand something. For example, now I'm coming. I wish this is my iPad for real. See, for example, now let's say we have this candle like this. There's most of the time you will know that Asia session want to be the low of the day or the high of the day is when that particular 6 a.m. candle, that 5 a.m. candle, the last candle of the Asia session is the one what's sweeping the entire candle. When you see that and there's liquidity around the market, you will just know that okay, this automatically is the low of the day. As long as it's coming from that what from that key level zone. Oh my god, what am I trying? As long as it's coming from that what key level zone, you will just see that this is literally it's going to be the low of the day. And London session will just retrace into it and you'll buy. So what is this? What are we saying so far? The simple thing we have been saying so far is this is that you want to know the trend, you want to know the zone, and another thing is this is that um you want to pick a JPY pair. Two pair is enough. I normally tell people it's not about sorry. Okay. So pick a JPY pair or two JPY pair. I don't trade, I only trade two pairs, three pairs at most. What I trade is USD JPY. I trade gold because of yes, of course, the time and price. I've seen it work on gold as well. And I trade GG, but my major pair is USD JPY. Gets me. So pick a JPY pairs because of the time and price majorly is for JPY pairs. It gets me. Now, one of the things you want to see what you want to see a sweep in 1 hour time frame. It gets me. I want to see a sweep. I already explained what a sweep is. Um, a sweep in 1 hour time frame. I want to see a sweep in 1 hour time frame. You get me? So then the next thing is that you want to have a very good trading plan. Yes. Yeah. So many of you are skillfully poor because of your mindset is not wealthy enough. You get me? So it's not about being skillful. It's about knowing what to do with your profits. Okay. So I think those are the steps for now. I want to say 1 hour time frame. Okay. Lastly, um, sorry, I don't want to say it's optional, but that is you want to see your lower time frame entry. Sorry. See entry and is I spend lower time frame entry for you that you want to see around 5 minutes, 10 minutes. No, I don't like 5 minutes, but 10 minutes, 15 minutes. But most of the time, um, I use 10 minutes majorly. 10 minutes majorly. You get me? I just want to see that market shift. That market shift. I want to see that market shift and I want to see what an FVG. You get me? And while I'm looking at that FVG, I'm also looking at key level. Now you must understand something. Is that JPY pairs? No, let me not put it to JPY pairs or key level. Let me not put it to JPY pairs. Let me put it to USD JPY because of I don't mostly believe in staying like trying to understand the model. I believe in trying to understand the pair. I stay with the pair to understand the language of the pair. Okay, now JPY, USD JPY mostly react on what? On breaker block. USD JPY mostly react on breaker block. You get me? So these are the steps to time and price. These are the steps you need. I've already explained every single thing. Let's go into live chat. Now the indicator you use this indicator. Okay. Um what? Now look at this. Look at this now. Now, one of the things you must understand is this is if we go to okay, Now let's okay, guys, are you with me? Now let's see something from this particular angle, from this particular place. Now this is you. This is I'm not selecting. I'm not just selecting like that. I'm just trying to show you. Now look at this. I'm trying to show you something. Now if you see here now, if you see here now, this is a sweep and this is an engulfing candle. This is the JPY. This is the this is the time and price because of this is Asian session. And if you see from here now, we have what a sweep. That is 1 a.m. candle what sweeping this particular what um sweeping the 12 a.m. candle, and you see there's a liquidity around here, and this particular candle came up towards tap on that what are they calling it, on the key level of that 1 hour time frame, and you can just what place your stop loss around here like this. You trade it into what into that key level. Oh my god, jeez, come in. Plus your stop loss is around here. Sometimes I keep my Excel around here, just depending on my, and I just trade it into what this zone. You get me? That gave you about what are they calling it? Clumpy, about 7 hour 100 pips during what Asia session. You leave at this particular buy zone because of okay, we are trading against the trend around here. Now, this is the one that we are trading right with the trend. I'm trying to show you something. You will see the Asian sweep back to back. This is Asian session. We have a sweep here, and after the sweep, you see markets what bounce into what the upside. We have what a sweep around here. After the sweep, market what go into the upside. Yes, not much move because of I think market use that particular place as liquidity. Time and price, JPYPS is literally the game changer for me. You get me? Market came all the way up there. Now we have another beautiful one around here. Around here again, we have this. We have this particular sweep of Asian session, and next is that we have this push up. You get me? What do we have again? We have another sweep around here, and what we push up. Now look at this particular one again. We have this sweep for the sell and what push down Asian session. Now here again, sweep for sell, come down. Now we are here. Now look at this particular one. I'm trying to rush up. We have a sell during Asia session. We have a sweep here during Asia session. Market what came all the way what down here. Do you get me? Now market has come into this particular POI, and you know that the market is bullish into this particular POI here, and market is tapping on this particular POI. Oh god, market is tapping on this particular what POI. Now, what did Asian session did? The next Asian session did was this. Was that Asian session came, and this is more like my beautiful A plus setup. This is more like my beautiful A plus setup. Markets came, gave an engulfing candle during the Asian session, and there was what a sweep. There was a sweep. You get me? Now, I hope you are seeing that clearly, or should I expand well? And there was what a sweep, and after the sweep, what did market did next? Um, let's check lower time frame. Now we have this here. Now we already have a change of a market shift around here. We have FVG, and we could literally buy from what we have this market shift around here. We have an FVG, and we can still buy from the breaker block. We can observe what market is doing because of mostly markets use breaker block. We just want to see a retracement to that particular breaker block, and we will just keep buying. Oh god. Why is it slow? 1x. Put it on 10x. Now you can see this. What is the market doing here? Market did something lovely. Break, came into this particular what? I think okay, this is another block. Market came into that particular other block, and market just bought from here like this. And we have this buy to the upside. God almighty. I need to rush. Time. Jesus back. Tesla are waiting for me. Shoot. Now I can target to this particular zone. Just visually Caesar R off to the next eye hand. I see. See, if there's, I think if there's anything we have in this class is that I'm unable to use this mouse very well because I use majorly my part. I'm sorry about that. I'm not asking you to go and start targeting 8RR in the market. 5RR is good. 5RR, because of my own trading plan is all about 5RR. 5RR is good. You can see target to this particular eye as well because of here. Obviously, market is heading to that particular place. You get me? So the next day, Asian session, I already know where the market is going, so I already know the directional bias of the market. Abi, that means the next day Asian session, I'm just looking for a buy. You get me? Even though I see a sweep, I know that okay, fine, this sweep is about to manipulate my ass out. So I'm not taking that particular that manipulation. You get me? So I'm just looking for a sweep. You get me? In the next day, that's why I told you. The first rule is know where the market is going to. Look for market to react during Asia session on a particular key level. You get me? The key level might be coming from a 1-day key level, a 4-hour key level. We want to see a 1-hour sweep around that particular key level in your 1-hour time frame. We want to see 1-hour sweep. We want to see a sweep in your 1-hour time frame on that particular key level. Once we see that sweep during Asia session, the next thing you should be expecting in the market is an impulsive move. Once we see an introduction of volatility, market is going to be very volatile. And after that, you will see market giving you at least minimum of 5RR, 3RR. You get me? 80 pips, 70 pips, and you're out of the market. You are done for the day. Now, and that is the same thing I've been saying. You can see it everywhere. I don't need to start using position 2 and prove it to you. This is a sweep. This is a sweep. This is a sweep. What did market do? Went down. You get me? This is another sweep. What did market do? Come down. You get me? And if we check this enough, this is enough for you to get at least 5RR or 3RR around here. This is another sweep. Asia session, market bounce up. Another sweep around here, market bounce up. Another sweep to the downside, market bounce down. Know where the market is going to, so you know the sweep you are looking for. Key levels. How do you know where the market is going to? Your directional bias of the market, directional bias of the market. Where is the market going to? That's the first thing. You want to see market react around key level, and you want to see market going downside. Now, if you see this particular buy, FZ, why you saw a sweep? Why did you not take this buy? Why will I take the buy? Market is literally coming from a zone here. Market is coming from this particular key level around here, so we should be expecting sell. And since we did not see the sell sweep, we avoid the market. We just leave it. There's no sell sweep. It gets me during Asia session, and that's just it. I don't know. This is another sweep around. We've talked about the sweep. After the sweep, market came all the way down. Okay. Please, I'm going to be any question. Question time. This is question time. Hey, Jesus. What are people saying? No. There is no need for this hyping. Just keep the hyping. Let's pay attention to the work. Thank you so much. Okay, indicator. The indicator I'm using. This is the indicator I'm using. FXNG, Asia session range. Let's go to indicators. Please, can you see the indicator? This Jesus, wait, sorry. I just added another nonsense. That is not the indicator. Wait. Okay, let's go back to indicator. Okay, this FXN Asian section range. That is what the indicator is. That is what you should use. You get me? It is just for telling you. Just see, it's not about the indicator. The reason why I'm using that indicator is that I just want to know when Asian session has started. So if you're through your normal timing, if you know where the Asian session has started, then there's no need for this particular thing. And yes, sorry for interrupting. Did all the sweep happen in Asia session? Yes, let's look at the sweep. They all happen during most of them happen during Asia session. Okay. I'm coming. I'm coming. Just 2 minutes. Let me just or one. Okay, just ask your question through typing. You see this sweep. You see this sweep. You see this sweep. You see this sweep around there. This is another sweep, another beautiful sweep around there. And market what went down. I love this. Like what market did there was very beautiful. Markets was already coming to the downside. Now, how do I mean? Now we have this particular. The first sweep was here, not that convincing enough, but this is what market did. We have this sweep during Asia session. Now the next day came, took outwards, took out Asia session as a liquidity around here. Oh my god, I'm trying to like we have this liquidity. You get me? Like this. Should we? So markets has already shown us, and we have a breakout structure. We have breakout structure here. We have the breakout structure of that market around what? Yeah. You get me? Now, market retrace, so we're expecting market to go down. So during Asian section, the next thing market did was what? We have this sweep. We have this sweep, Asian sweep. And now, if you check something now, this is very beautiful. I need to pay attention to this. Now, that Asian sweep is actually reacting from a key level. If you check your line shots, eye shots. Now, there's a key level. There's a key level. This is a 1 hour key level around here. A 1 hour key level. And that sweep tapped on the 1 hour key level. You see, tapped on the 1 hour key level. Bro, we are sending this thing down to this particular point. We are sending that particular market down to this particular breakout structure. Nothing should stop that. Okay, sorry, we don't use the word must in trading. At least market should obey that, please. So we if we go to lower time frame, should we back test this point? I don't know whether we are. We'll go to lower time frame. There. Go to lower time frame. I'm not seeing 10 minutes around it. We'll go to lower time frame around that particular point. No. Okay, we'll go to the lower time frame around that particular point. Now, we've seen this particular place now. Most of you need to learn this. Now, we've seen this market shift around there, but this market shift is not strong enough. Why? Why is it not strong enough? Because of it's weak. It's weak. You get me? So on the norms, if there's a market shift around there, because of this particular FVG, you get me? I could literally enter the market from this, Kelvin thought you guys said that neck. So we could literally enter from that particular place like this. That is the aggressive entry. That will be the first entry aggressively, but that market shift is not really that much. So taking market directly from here, from this particular place like this, might really not be a good idea. It's like the confluence percentage of the setup is not really that good. You get me? It's not really that good. So we want to like wait for a re-entry while we are riding that particular market. And let's say market gives us a re-entry. Okay. Now look at this point of the market. Let me show you this. Though I will not even advise you to take this kind, like to ride on this particular kind of re-entry. We have a sweep here. We have a sweep here. We have a sweep here. You get me? So we can take, and we have liquidity. Though 5 minutes, I don't like 5 minutes. It's because of there's no 10 minutes here. That's why I'm just taking this. We have this here, and we have market what's buying from this, selling from this particular angle. This zone here, this is a key level. This is a key level. And it gets me. And the market was sold from that particular place. But I'm not going to, sincerely, I'm not going to take trade from that place. I'm not going to take trade from that particular place. Yes, I won't take. I can take a sell stop after this breakout structure and go down, but taking this, I not really take this, sincerely. Okay. So let's opt that one out. Let's go back. Let's see more before we close. Okay. Let me go to the question box and see questions. Hey, how do I get my directional bias? No, the directional bias. Okay, let's see questions. More. Where will I start from? Okay, is this like previous questions? Okay, I think I have to go down. Okay, how do I? The sweep must happen. Okay, now one at a time. One at a time. Stop typing. Let me answer you guys. I'm just going to pick few questions from here. No, I said the time and price is during Asian session. That is when the reason why is this is that you want to get that volatility, that high volatility in the market. You want to get that impulsive move. That impulsive move. No, it is not about AMD. It is not accumulation, manipulation, or distribution yet. No, that is not it. It's all about a sweep model. Pay attention. This is what I've been saying. I've been saying this since I said as simple as this. I explain all of this because if I know that once we enter the live chat, there will be a lot of questions. And I was explaining all of this initially. I said something. All right, let's go up. I don't even know where those place is. This is me explaining directional bias here, Abi. This is me explaining directional bias here. I was explaining directional bias. Okay. I was explaining directional bias here, the trend of the market. You get me? I said something. One of the most important things you must know about directional bias is this: is that in directional bias, if you say that you are trading directional bias, you are not trading reversals. You are trading what continuations of the market. You get me? So I was teaching you that okay, let's say this is an uptrend here, and one of the ways to get continuation of the market is that the mini structure wants to give you a break of structure and this kind of stuff. A break of structure. They want to see market reversing with liquidity. Mostly, I like using engineering liquidity. Want to see market reversing, giving you that liquidity around it. And this is a key level. Now, I say something will happen around this key level. What will happen around this key level is this: is that during Asia session, 1 hour time frame precisely, we want to see a sweep. You see, I don't need to show you all of this. You can go and check the time frame of Asia session. I gave you 1 a.m. Asia session opening start from 1 a.m. So I want to see 1 a.m. candle sweep 12 a.m. candle. Now, for me to see 1 a.m. candle sweeping 12 a.m. candle, I want to make sure that what I am we are using 1 hour time frame. I want to be patient enough to let the candle, the 1 a.m. candle end. And once it's ending, it's end with a sweep. And once it ends with a sweep, if I want, I can take it directly from that 1 hour time frame, or I go to 5 minutes. I see market shift, returning market shift, giving a fair value gap. I can take the fair value gap, or I can take the key level because of you will mostly see a key level when there is a market shift and there's an FVG. You will see a key level. You must see a key level. You get me? And for every single market shift has a key level. You will see a key level. So I can take it directly from the key level. I can take the FVG. I use the key level whenever I know that the price data, the current price data of the market is far above what the FVG. I will just use the key level instead. You get me? So that is what I'm saying. So it's just 3 steps. Know the directional bias of the market. Know the trend. Where's the market going to? You want to see a 4-hour key level or a 1-day key level during your Asian time, your 1 hour time frame. You want to see a sweep. You want to see a sweep. 1 a.m. candle sweeping 12 a.m. candle, or 2 a.m. candle sweeping 1 a.m. candle, and from there you take your market. That is simple. There is nothing. It's not complicated. It's very simple. You get me? Please. Yes, market structure helps you to identify the directional bias. I explained this thing. I said, what is a trend? Trend tells you where the market is going. Market structure tells you how the market will go there. You get me? Is that simple? I think that's simple enough. There is no, there is, I, mm. The video is recorded. The video is recorded. You get me? I taught key levels. I taught you the key levels. We have two forms of key levels. The first form of key level is the validated key level and invalidated key level. And because of it is called invalidated key level, does not mean that it is not useful. You get me? I said types of key level. We have the V-shaped key level. We have the A-shaped key level. We have the open-close key level. You get me? Yes. So I think um if you go through the recording of the video, it's going to help you with a lot of questions. Now you have to watch the video again and again, again and again to help you out. So thank you so much. Thanks so much. God bless you for your time. We'll end it here. I'm used to it now, and it is my first lab. I'm waiting for the day for that.